This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Commodity prices jumped to multi-year highs on Thursday after Russia invaded Ukraine, raising the prospect of tighter supplies due to the possibility of sanctions on Russian exports, transport disruptions and Moscow withholding supplies. Russia launched an all-out invasion of Ukraine by land, air and sea on Thursday, the biggest attack by one state against another in Europe since World War II. It supplies 10% of the world's oil, a third of Europe's gas and, together with Ukraine, accounts for 29% of global wheat exports, 80% of sunflower oil exports and 19% of world corn exports.
Ukraine's military has suspended commercial shipping at its ports after Russian forces invaded the country, an advisor to the Ukrainian president's chief of staff said, stoking fear of supply disruption from the leading grain and oilseeds exporters. Russia earlier suspended the movement of commercial vessels in the Azov Sea until further notice, but kept Russian ports in the Black Sea open for navigation, its officials and 5 grain industry sources said on Thursday. Ukraine is a major exporter of corn, maize, much of it destined for China and the European Union. It also competes with Russia to supply wheat to major buyers such as Egypt and Turkey.
Moving on to the top news in the energy sector.
At least 3 major buyers of Russian oil have been unable to open letters of credit from Western banks to cover purchases on Thursday, 4 trading sources said, citing market uncertainty after Russia invaded Ukraine. Banks are not willing to open LCs for the moment, so it is a bit of a standoff, one of the sources said. He asked not to be named due to the sensitivity of the issue. Letters of credit from the bank of the buyer are standard practice in commodities trading and guarantee the seller's bank that payment will be made in full and on time.
Indian refiners' crude oil throughput rose in January, holding near 21-month highs reached in November, with fuel demand and refinery runs expected to grow further on the back of a strong economic recovery. Crude oil throughput in January was however down 0.5% year-on-year to 5.13 million barrels per day, 21.71 million tons, government data showed on Wednesday. Throughput in January was 1% higher from December levels and holding near November's 5.25 million barrels of oil per day.
Next, we have the top news in metal markets.
Gold hit a more than 1.5-year high on Thursday as investors sought cover in the safe haven metal after Russia invaded Ukraine and aggravated supply risks to palladium, powering prices of the autocatalyst to a 7-month high. Palladium climbed 6% to $2,631.95 an ounce at 10:27 a.m. Eastern Standard Time, having hit its highest level since July at $2,711.18 earlier. Spot gold rose 0.6% to $1,919.30, having touched $1,973.96 earlier, its highest since September 2020. U.S. gold futures added 0.6% to $1,921.
Aluminium prices rallied to a record high on Thursday after Moscow launched its attack on Ukraine, sparking fears of sanctions that could cut supplies from major producer Russia and disrupt energy supplies needed to produce the metal. The invasion of Ukraine by land, air and sea on Thursday is the biggest attack by one state against another in Europe since World War II and confirmed the West's worst fears. Russia is a major producer of gas used to make electricity, a major component of aluminium production. Gas prices have surged since Russia-Ukraine tensions escalated and led to output cuts in Europe, leaving consumers scrambling to secure metal. We will now look at the top news in the agricultural sector. China's soymeal prices rallied to a record high on Thursday even as the government plans to release soybeans from reserves amid worries over tight supplies in the market. China's soymeal futures prices on the Dalian Commodity Exchange rose 5% to hit 4,064 yuan, $643.13, per ton, up 12% since the Lunar New Year holiday. China said this week it would release some soybeans from state reserves to boost supplies but did not give details of volumes. Soymeal cash prices in Rizhao in Shandong province, a main processing hub in eastern China, rallied to 4,400 yuan per ton, up 250 yuan from last week, and the highest in almost 9 years.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.